You're listening to The Whole Truth, a Resources Rising Stars podcast.
Welcome to the latest episode of The Whole Truth podcast. I'm Paul Armstrong, and I just had a very good chat with Alex Dorsch. Alex had a very challenging week. He's the Managing Director of Chalice Mining. Chalice put out their scoping study on the Gonneville project in Western Australia, and the share price, to put it bluntly, got knocked around. It was a harsh reaction, many would say. Alex hasn't dismissed the share price and some of the feedback he's had, but equally, he feels a little aggrieved in some respects, and after listening to this podcast, I think he'll share his view. The project and the company is still in its infancy in the scheme of things, perhaps a victim of its own success having grown so fast. And the scoping study is just that, a scoping study, but clearly some investors either didn't like what they saw or wanted more. Alex says there is much more to come. It's still early days, the project's growing, and there's a lot more work to do on key studies like metallurgy and mining. Alex has faced the music, he took it on the chin, he explains why he thinks the share price reacted like it did and what the company's focusing on to ensure that it unlocks the full value of what he says is a world-class asset with huge growth potential in Western Australia. Alex is a young bloke, very smart guy, very driven and motivated, but he's also straight to the point. He's given a very full and frank assessment of the situation. Chalice shareholders will get a lot out of this chat, as will those who are wondering whether the lower share price is an opportunity to buy. Alex, I expected you to come in here with a black eye and a blood nose and a bit of bandage around your head. You look remarkably calm for a bloke that's had a pretty tough couple of days. What do you make of it all?
Yeah, it's a good question, Paul. I am somewhat perplexed, I have to say. I think we weren't anticipating that sort of reaction to any degree. We obviously think our study is fundamentally robust and high quality, and we stand by the assumptions we made. I think some of the economic assumptions we've used have been, I guess it's a bit of a shame that they've been the focus of a lot of the negative criticism this week. But that has been a bit surprising, given that we are, talking about a mining operation that comes online in 2029. So quite frankly, spot prices or near-term prices are largely irrelevant. And we're talking about a mining operation that comes online in 2029 and continues for something like 20 years. And probably goes well beyond that. So we were somewhat surprised at the negativity around those assumptions. I think it's also is somewhat questionable. I think in some minds the economic realities of some other long-term assumptions that are out there, particularly around PGE prices. We've obviously showed people what the supply curve for the PGE, what the cost curve for the PGE industry looks like at the moment. And it's quite difficult for any of those sort of third or fourth quartile producers to make any sort of margin at current levels. So our view is PGE prices really have to go to more like 1,500 plus levels for the industry to be sustainable. And there's also a very high level of cost inflation in particularly South Africa. There's huge operational challenges. Norilsk obviously is politically very complex situation. So there's a number of factors in that PGE supply chain which have big question marks over it. So we were again quite surprised at that there's I guess such a dogmatic view around the consensus long-term forecasts.
You're right, there has been so much debate in the past couple of days about the price assumptions you used in that scoping study, but it's irrelevant, isn't it? If you take a view that this project won't be in production for, as you say, 6 or 7 years, and if you have a view that prices for the products from that project will be at the same level they are today, you wouldn't buy Chalice shares anyway, would you? In fact, you probably wouldn't buy shares in many of the ASX-listed resources companies.
I think exactly right. There's some economic realities that people are perhaps ignoring. I think it just reflects, I guess, a very weak sentiment across the market at the moment. The reality is that we have a lot of option value on prices, but also a lot of exploration upside beyond what we know about today. And obviously the study's done a good job at sort of looking at some options for us, but it is not a comprehensive suite by any means. So there's lots to do, and as you said, there's lots of reasons to own Chalice because of that option value and that fundamental value. When you consider how few projects like ours are around in the space or in the investable space.
Do you think, in many respects, Alex, you and Chalice, your team, are a victim of your own success? It's still a relatively young company, isn't it? And to have a market cap that you've got and to have built that up so quickly probably encourages people or results in people losing sight of the fact that it's still, in many respects, a company in its infancy.
Yeah, I think that is perhaps a victim of our own success to a degree, because we found something so unique and so big that the market doesn't see these types of discoveries very often. It's sort of, once in a decade, once in 20-year type occurrence. So the market, I think, struggles, particularly sort of the short-term focused market, struggles to understand that maturing and being development ready on a project of this size does take a lot of work and a lot of narrowing of estimate accuracy over time. And I think one of the frustrations we've seen is that the scoping study has been thought of as almost like a development ready, sort of ready to pull the trigger on, whereas there is a lot of work yet to be done to obviously tighten up the accuracy on those assumptions, go through PFS, then FS. There's a huge amount of work to do before we can be in a position to accurately value the asset, or put it this way, get a metric from a study which is a representative of the value of the asset.
Do you regret doing the scoping study? Some people would say, why didn't you just keep drilling it, grow the inventory, and eventually jump straight to a PFS level?
No, I think we've had a lot of good feedback on the study, the quality of the work, the de-risking element that brings, even though I guess there has been a lot of commentary around the price assumptions, that the vast majority of the feedback around the fundamentals of the study and in the importance of how much that de-risks the path line forward has been very well received. So no, we needed to do a scoping study and we needed to scope some options. But I think, like I said, the expectations I think were perhaps that we were going to be more advanced than where the project is. So we have to, I think, be realistic about what it takes to develop a big mining project like we have. So
where do you go from here? Is it still the case that this project has a big exploration element to it? Can we still say to investors, hey, the real driver of growth here, outside of recovery in commodity prices, is actually in ongoing exploration and resource growth?
Sure. So I think that's the challenge of trying to do studies on a resource that's still being defined and still growing. So there's no perfect answers at this point, right? So we've got obviously a very sizable resource there on farmland at Gonneville, and then we've got this huge land package which surrounds that, which we've got effectively full control over, and we're doing lots of work regionally, and we know these things typically do repeat. They typically do cluster. They are very, very seldomly singular occurrences, mineral deposits of this type. So, when you think about the big famous nickel-copper-PGE provinces, you typically think of, strings of deposits, clusters of deposits over camps, and then potentially multiple camps within provinces. And so, the West Yilgarn, we absolutely think has much more to give. But we are effectively exploring it for the very first time. So whilst we know, getting a project like Gonneville developed requires a lot of work, a lot of analysis, and a lot of iterations to get through studies, it's exactly the same in terms of exploring a new province. You got to acquire data, interpret that data, reassess, and then continue to refine and hone in on where the potential lies. And we've got dozens of potential targets that we already know about in that West Yilgarn, and we're going to really start upping the ante and drilling them in the coming months, which is obviously very, very exciting, and it demonstrates, I guess, Chalice is much more than just the Gonneville project, and the Gonneville scoping study that obviously is capturing the headlines this week.
Would you expect that time will show that this scoping study, Alex, was actually focused on what would be a relatively small part of the overall development scenario at Chalice? That by the time you come to actually dig a hole here and produce something, the project would be vastly different from the one that was in that study anyway?
I think that's exactly what you see if you look at studies from other projects. I remember shortly after I joined Chalice in late 2017, I think the Kathleen Valley, Liontown's Kathleen Valley scoping study went out with a very large open pit, somewhat more modest metrics than the companies, obviously seen in the DFS and subsequent studies. And that project completely changed from their initial scoping level view, if you like, or the cases that were presented in the scoping study, to what is now being constructed out there at that project. And so in the space of about 4 or 5 years, things change. And yes, as obviously the resources better understood, drilled out, the metallurgy is better understood, the process flow sheet, the optimum pathway to market is better understood, you are iterating, you're capturing value, and you're potentially totally transforming the nature of the project as you advance it. And so, yes, I think you see that time and time again, particularly in the more larger, complex projects. Obviously, Kathleen Valley being a fantastic large lithium asset. You can see that Gonneville's probably even more, complex and multi-layered because of this polymetallic nature, and that's what makes it. That's what gives it this potential that obviously a lot of our strong believers can see very clearly, is that, resources like this just aren't found very, very often, and they can become some of the most, prolific, long-lived mining operations and sort of iconic mining operations of the world.
Now, you mentioned that exploration obviously has the potential to change the face of this project dramatically from here on in. But the sale process that you're running in parallel with that exploration could also change the dynamics, couldn't it? I mean, if you were to bring in a big expert, a big company that specialises in PGEs and the like, that might bring a different lens to the project. Is that possible?
Look, absolutely. That's what we flagged when we started the partnering process that's ongoing at the moment. We knew there was going to be some feedback from those parties, and that was going to be very interesting to sort of get some perspectives from companies that have been building assets like this and operating assets like this for decades. So we have sort of left deliberately that options open. We've taken that approach where we want to maximize the optionality and tweak things as we go through the studies phase according to what we hear from those parties, and also bring them in early, and then there's a co-design element of on the asset. So it's very much from the outset designed to at its full potential, as opposed to us sort of going on one path and then a bigger entity potentially having to change the studies or redo the work again. So that's what's driven us to open the door to strategic partnerships, and I think that's a fantastic way to fund big resource projects. Obviously, the LNG industry was very, very effective at doing this, some of the bigger, more sort of tier one type precious metals assets in the world also have sort of partnerships at the asset level, which work very, very effectively. Where there's sufficient scale to warrant sharing a bit of upside, but sharing a bit of risk.
What would you say to an investor who's watched their Chalice shares go for an almighty run? They've done well out of it. They've run it up high. It's already pulled back significantly in line with commodity prices and the wider market. Now they've had another bruising on the back of this scoping study and some of their reaction. What would be your message to those shareholders who have decided to hold on and stick it out?
I think first and foremost, don't listen to the noise. There's a lot of short-term noise and speculation and naysayers and a lot of skepticism in a market, particularly when times are tough. So The industry, in terms of where commodity prices are, and the sector is in a tough period at the moment, probably with the exception of lithium. So that I would say sort of try and sort of see the big picture, and I guess that's how I run the company, and that's how Chalice operates. We set a vision and a strategy, and we stick to it. We don't let the sort of short-term nuances of market forces impact our thinking. And I think that's where you can generate significant alpha as an investor. Obviously, if you can pick those trends and pick those moments in time where, almost there's, as Warren Buffett always says, when there's maximum panic, that's where you should be most greedy. I think that's the first message. And I think secondly, you look to the fundamentals of that we have there, at Gonneville. It's scale, it's the commodity mix, it's the scarcity of those metals, the desirability of those metals to achieve all the aims that the policymakers are trying to achieve, decarbonising the global economy. You look beyond, and then you look beyond that short-term noise, and what you see is there's very few investable opportunities in the suite of commodities. And in terms of new projects in particular, there's very, very few options to select from. So I would say focus on the long term and the big picture, and the resource is still getting defined. The studies are still working out the optimum way to develop this asset. And yeah, we've got the right people within Chalice to tackle the problem. And like I said as well, we've opened the door to strategic partnerships, which we think can add a lot of value as well.
I mean, if you were Twiggy, perhaps you might say, don't worry about these little challenges, just look at the role we're going to play in saving humanity.
Yeah, look, we won't go there with saving humanity. I think that's probably a bridge too far for us.
You're not claiming that one, mate? That's not on the agenda?
Sure, maybe one day I am young after all, but look, I think yeah, you have to have a bit of vision, and certainly no one can criticise Andrew Forrest's vision. I think for sure you have to admire the vision he's had there in the Pilbara, and what he's been able to create there is quite frankly unrivaled in the space. And I've been obviously lucky to spend time with Tim Goyder, who's obviously a fantastic entrepreneur, very successful guy, and obviously it was fantastic to get a call from him yesterday reassuring me that the long-term smart money is telling you, don't worry about this short-term market. Focus on the long-term, and you're doing everything right. So it's important to have those types of people in the world. I just wish there was a few more of them.
Now, Tim's not one to mince his words, is he? He was quoted in the mainstream press saying that the market needs to get real in respect to the share price reaction to the scoping study. Tim doesn't perhaps have the same sort of desire to have apostles as Twiggy does, but he does call a spade a shovel. He was of the view, isn't he, that you've got to be there for the long term in these sorts of projects?
Yeah, absolutely. I think it goes without saying, if you're in the mining industry, you want to have a serious prize, because there are risks. And so if there is a sufficient prize there, which Gonneville is, and the West Yilgarn, certainly is, then it makes it worth it, because you can sort of, get through these moments of weakness and these periods of short-term focus, and you can sort of tolerate the ups and downs if you can see that there's a big enough prize there. So
let's finish off by recapping. What are the things that you're going to focus on? Let's say the 3 key pieces of action, news flow, if you like, over the next 9 months, the rest of this financial year, that investors can expect from your team.
So being still a small company, of course, the team is moving very quickly, adapting to information, new information all the time. So the things we're looking at, obviously, as we've outlined, the priority, the focus for Gonneville now is to delineate underground resources and really sort of, bring in the early underground option that we can see transforming there, and that we think could have a material impact on the open pit and the economics. Particularly if it can bring forward higher grade early in the mine plan, which we think it can. Secondly, I think that flow sheet, we've done obviously a lot of work on it, but there is a lot of work to go to work out the optimum pathway there. As I said, we do have some more work to do on the nickel and cobalt. That's probably an area we've had some criticism on and we take that criticism there. We've opted for, I guess, a lower risk strategy, by producing a copper concentrate and then sort of floating the nickel into a bulk concentrate to treat with a hydromet process. We need to do some more diagnostic work because we don't really have a very good answer at the moment mineralogically as to why those nickel and cobalt recoveries are low. So there's that is the focus for the processing team. And then obviously, permitting is the next one that's obviously coming up very quickly. The beginning of that process, we were going to be referring this project, starting the major environmental approvals early next year. And then obviously from a corporate perspective, on top of that, it's really sort of, working this strategic partnering process and working out, who is the right long-term partner to bring in to this asset, or in what form we do that. And obviously lots of options on the table there. So we continue to evaluate those. And I guess more importantly, stay focused on the painting that full potential value picture for shareholders on what the West Yilgarn could be, and sort of keep the drill rigs going on all those other targets, all those other potential Gonneville-like targets out there that we have in the province. There's
a couple of work streams in there that could have the potential for a major impact on the economics, isn't there? You mentioned the underground and the potential for the higher grade ore and what that could do, and also the recovery work. You increase those recoveries, presumably that goes straight to the bottom line. So I take it from that there's a fair emphasis on things that would drive increased IRRs and the like. It's not just about making the project bigger.
Yeah, exactly. It's not just about size. So I don't like to use I don't think calling the study half done is appropriate, because there's obviously a lot of work we've done there, and we've incorporated a lot and achieved a lot to get to that point in a short period of time. But I guess the underground, complementing the open pit mining schedules will in our view be significant, and that will sort of allow it to be a complete study, if you like. So and exactly right. Obviously, recoveries are everything. Everyone who knows mining understands that what you ultimately get in terms of recovered metal out of your processes is the make or break of a project. So we've got lots of work to do there. Like I said, to tweak in it. Yeah, of course, it's at a scoping study level of definition, and typically what happens now is we do some diagnostics, we really do more detailed work, and hopefully we get a better answer at the end of it.
Alex, thanks very much for your time today. You've obviously had a bit of a bruising few days, but nonetheless, as I said at the outset, you're very calm about it, which I suppose reflects the view that this is a very long-term project, and in a couple of days, share price reaction ultimately in the long term won't be here or there. So look, thanks very much for taking the time out to join us. And we'll obviously watch this very closely, and perhaps have another chat around Christmas time to see how the plan of attack is unfolding.
Thanks, Paul. I like how you lured me in there for a follow-up.
Thank you.
Thanks, mate.
You've been listening to The Whole Truth, a Resources Rising Stars podcast, produced by Resource Media, hosted by Paul Armstrong for Reed Corporate. Please note that Reed Corporate does not provide investment advice, and investors should seek personalised advice before making any investment decisions.